As Africa's financial landscape evolves, private sector innovation is playing a pivotal role in building robust and inclusive payment ecosystems. CNBC Africa spoke to Nkebet Mesele, founder and CEO of Intreensic, for more.
Post-COVID, Africa saw a great revolution in digital payments. A lot of unserved markets started to get served, but there are still some that remain underserved. And I'm going to talk about a few. So we have the agriculture sector. We have 60% of Africa's land is still uncultivated. And today we see a lot of people going into fintech, but it would be great to have people move more into agri-tech, bring in AI-driven credit assessments, bring in smart contracts via blockchains, bring in things that will help drive financial inclusion and take these farmers to where they can be served and bring them into the financial environment. You have renewable energy, for instance. We have a lot of wind. We've been blessed with great natural resources. How are we using that for solar panels? How do we integrate pay-as-you-go models into solar financing? We've started that, but there's so much that can be done in different areas of Africa. One that is really close to my heart is healthcare. So when we look at health tech, there are still, I always say in Nigeria that the difference between life and death is about $2, for instance. That's about 5,000 naira. How do we ensure that we are getting people access to micro insurance solutions through technology? How do we ensure that we deliver digital credits to allow people access healthcare? And when we now look at who should be poised to do this, in Kenya and in Nigeria alone, we have different technology hubs.
Nkebet, you're also seeing a rise in partnerships between fintechs, telecoms, and even traditional banks. But are these collaborations really delivering real financial inclusion, or are they mostly commercial players targeting the middle class?
This is interesting. So collaborations would always remain important. Collaborations are at the heart of things that anybody, should be doing and thinking of. Scaling digital payments requires more than just private sector innovation, which is what we see today. We need regulation. Africa has strong regulatory bodies when it comes to central bank and the finance. Now, we need interoperability. If you needed to send money to me from Kenya to Nigeria, you would have to travel to SWIFT to come back. That's go to the US or wherever SWIFT is and come back. How do we ensure that through the governments, we are bringing in these partnerships? And I see PAPS has started that, and AFCFTA has started that, but it's beyond just looking at how governments connect. How do we ensure that the governments and the regulators start to work with the private sector? So that policy harmonization needs to happen. Africa is a continent that is one, but yet so diverse. So at the core of it is regulation. And for this to succeed, it shouldn't be just between the private sectors. It shouldn't be commercial. It should actually be the government being interested in collaborating with the private sector to ensure that there's that synergy. The private sector brings their experience, the government brings in their regulation and their mandates to ensure that across Africa, we have that interoperability.
Indeed, and interoperability is a very important, and you also have the issue or the aspect of regulatory bottlenecks, which remain a key challenge. So do you think private sector partnerships can succeed in scaling digital payments without significant policy reforms? You have talked about policies, but let us look at it from a cross-border transaction perspective.
So from a cross-border transaction perspective, I believe that it needs to be accessible. There needs to, because one of the complexities you see with cross-border, especially within Africa, is you need to peg it to a rate. You need to peg it to an actual currency. We need to move beyond pegging it to dollars. We need to ensure that the private sector shows some sort of trust that the regulators can accept, Because yes, we say regulator bottlenecks, but sometimes it's based off of fear. It's based off of, if we open this up, what is the greater danger? So how do we ensure that from the private sector, we're bringing in things that are tested, trusted? We are pegging, if we do a cross-border transaction type, we are ensuring that we peg it maybe to 2 strong currencies in Africa, ensure that we own Africa, and we're not being reliant on, offshore currencies to peg. And that way, even if we start within borders, we start with the SADC corridors, we start with the WAMSI, we do the East Africa corridors, we do the Jimumwa and the Sima corridors, peg those corridors together that have similar currencies or can work within each other.